16,000. That's how many jobs a month this economy actually created over the past year. Not the number you saw in the headlines, 16,000. Everybody spent this week watching Jackson Hole. The number that mattered came out an hour earlier, and almost nobody opened it. I'm Ron Siegel, Certified Liability Advisor, helping families build wealth through strategic debt management. This is your weekend update for the week of August 28th, 2026. Where rates sit right now. Let's start with a number everything else hangs on. The 10-year Treasury is sitting at 4.71% as we record this. Last week it was 4.73%. The market is not closed yet today, so that can still move a little before the bell. But look at the direction. Even after a rough Friday morning, the 10-year is a touch better than where it was sat a week ago. Here's what shook it up. The new Fed chair, Kevin Warsh, gave his first Jackson Hole speech this morning. He sounded more worried about inflation than he has before. He said that if the Fed is not confident inflation is heading toward its goal, they have work to do. He was not impressed by the cooler summer numbers, and he does not think money is tight enough right now. What he did not do is commit to anything. No rate hike, no clear path, just concern. The market moved anyway. The odds of a rate hike in September went to 48%, up from about 35% the day before. Mortgage rates this week, here are this week's national averages. The 30-year conventional is 6.75%. The 30-year jumbo is 6.88%. The 30-year FHA is 6.34%, and the 30-year VA is 6.35%. These are national averages from Mortgage News Daily, not an offer to lend. The jobs number that got quietly erased. Now, here's the part almost nobody covered. This morning, we got the once-a-year correction to the job numbers. Every year, the government goes back and checks what it reported against what actually happened. This year, the correction removed 79,000 jobs from the past 12 months. The original count said 273,000 jobs were created. After the correction, it is about 195,000. Spread that over 12 months, and it comes out to roughly 16,000 jobs a month for the entire country. Look at where the cuts landed too. Government jobs were revised up. Private sector jobs were revised down by about 178,000. The private sector is the part that tells you how the real economy is doing. So what does this mean for you and your family? A job market creating 16,000 jobs a month has almost no cushion. If things slow down, there's not much there to catch people. That's worth knowing if you're thinking about changing jobs, starting something of your own, or taking on a payment you would have to carry through a rough patch. 2 inflation numbers, 1 full point apart. Here's something that should give you some hope, and hardly anybody has heard it. The inflation number the Fed pays the most attention to came in at 3.7% overall and 3.3% on the core rate. That sounds bad, but there is another measure, one that throws out the wildest moves at both ends and looks at the middle, and it reads 2.3%. The core CPI number reads 2.5%. Same economy, 3 different answers. So why the gap? A big piece of it is one line item, portfolio management fees. That is what it costs to have somebody manage an investment account. That line item jumped 5.62% in a single month and is up 20% year over year. On its own, it adds 0.44% to the annual core rate. Take it out, and that 3.3% is closer to 2.9%. And here's the part that should make you tilt your head. That line went up mostly because the stock market went up. Nobody raised a fee. If your account grows and your advisor charges the same 1%, the government's math counts that as inflation. You'd not pay any more for anything. Your account just got bigger. So ask the obvious question. Would raising interest rates lower your rent? No. Your health insurance? No. What somebody charges to manage an investment account? No. What it would do is raise the cost of your credit cards, your auto loans, and anything else carrying with a variable rate at a moment when the job market is already thin. Strategy beats rate always. If you're renting, pay attention to this. New rents rose 0.1% last month. Year over year, they're still down 0.8%. So rents are still cheaper than a year ago. But this was the 7th straight month of increases and is the first August increase in 4 years. August is usually when rents cool off. Two more signs. The share of empty apartments dropped from 7.3% to 7.1%, and the time it takes to rent out a unit fell from 32 days to 30 days. Here's why this is happening. Higher mortgage rates are keeping people who want to buy stuck in the rental pool. More renters competing for the same units means landlords have less reason to discount. If you've been waiting another year to buy, it is worth running the math on what year of rent actually costs you. And yes, we have a rent versus own tool that can draw that out for you. Just ask. What we are watching on rates. Will Jackson Hole change everything? No. It changes what people argue about, not the range rates live in. The 10-year is boxed in between roughly 4.3% on the low end and 4.76% on the high end. Every time it pushes at 4.76% and fails to break through, the sellers lose a little more energy. 5 failed attempts at the ceiling would open the door for rates to fall below 4.39%. And that's the level we are watching. When your tax return hides your real income, this one is to the business owners and self-employed listening. Your tax return does not tell your whole story. If you earn a 1099, the 1099 shows what you actually made. Then your amazing CPA or tax planner goes to work and takes every legal deduction available to lower your taxable income, which is exactly what you pay them to do. By the time your return is filed, it no longer looks like the income you really earn. That gap is why a lot of successful people get told no. We have a set of loan programs built for exactly that situation. This week, we're highlighting the 1099 loan. It looks at the 1099, not just the return. You should not have to choose between smart tax planning and buying a home. You can get the details at rsrlinks.com/1099. That's rsrlinks.com/1099. New this week, the Loan Estimate Analyzer. Here's a new tool we just put in your hands, and I think you're going to like this one. It's called the Loan Estimate Analyzer, and you'll find it at rsrlinks.com/LE. rsrlinks.com/LE. If you're buying or refinancing right now, somebody has handed you a loan estimate. It's a few pages of fees and numbers, and most people have no idea which of those charges belong there and which do not. Upload it, and the tool shows you the items that should potentially come off. It takes minutes. Try it before you sign anything. Featured this week, we shared 5 pieces for you this week. Here they are. Number 1, a low rate isn't a good loan. Most borrowers never learn the difference. Number 2, you earn $240,000. Your tax return says $96,000. One loan program sees both. Number 3, nearly 40% of vacation home sellers just cut their price. Ask for the buy down instead. Number 4, you won the landlord game. The tax bill is optional. And number 5, the VA loan is not the problem. Not knowing how to use it is the problem. There are several more on the dashboard beyond these 5. You'll find all of them on the right side of your dashboard or below the video, depending on the device you're using. The Home AI drawing. Quick note before the calendar. Anyone who joins our Home AI program by September 24th is entered into our weekly drawing. Next week's prize is a $100 gift card to Costco or Target, your choice. Home AI is free. If you're not in the program or you are not sure whether you are, visit rsrlinks.com/myhome, rsrlinks.com/myhome to register. Claim your address by Thursday to be in that week's drawing. No purchase is required. Here's the one thing to do the moment you register. Email us and tell us Costco or Target. Do not wait until you win. Pick your card and send us the email, and you'll have your choice on file when your name comes up. This week's winner is Laurel Dial. Congratulations, Laurel. Next week on the calendar, Tuesday brings the ISM Manufacturing Index at 7 in the morning Pacific time, along with job openings report. Wednesday brings the ADP private payroll report at 5:15 in the morning Pacific time, and the Fed's beige book at 11 a.m. Thursday brings jobless claims at 5:30 in the morning and ISM services at 7 a.m. Pacific. Friday is the big one. The August jobs report lands at 5:30 a.m. Pacific time. The forecast is 45,000 jobs, with unemployment expected to tick up from 4.1% to 4.2%. That is your weekend update. You can find the entire update and share it with someone who needs it at rsrlinks.com/WUC. rsrlinks.com/WUC. We appreciate you listening, and we'll speak to you again next week. Free.